Hi, my name is Joshua Mahony, Chief Market Analyst at Scope Markets. This is the look ahead for some of the earnings for the week starting Monday, the 12th of August. And of course, we are surrounded by fear within the markets at the moment, with significant volatility playing out as people think we could be in a recession or moving towards a recession in the US. And of course, looking towards Japan, where we're seeing 12% moves, 10% moves, up, down. Where's it going to go next? And certainly that move within Japan has been influencing what's happening over in the US, as well as the carry trade influences demand for some of those big names in the US. But nonetheless, earnings will continue to play a key role. But that backdrop of a potential recession that people are calling for after that weak jobs report out of the US really does provide the backdrop for some of the moves for these companies leading into their earnings. Perhaps that downside move gives us an opportunity. Or perhaps the weakness we're seeing in terms of the economic data over in the US is indicative of what we're going to see for earnings. Now, first and foremost, let's look at the breakdown for where we are at the moment. 81% of the S&P 500 having reported, and we can see that the areas that haven't necessarily seen as much reporting are consumer cyclicals, with 68% having reported thus far. Healthcare, we've got technology, consumer non-cyclicals. So those are the areas yet to see significant names. And it comes as no surprise that the area that we're looking at today really revolves around the consumer, but also an element of sort of manufacturing and technology as well. In terms of performance, utilities, the underperformers we can see here, strength coming from the tech sector, also seeing some strength in terms of the healthcare sector. In terms of the breakdown for the amount of earnings relative to the earnings season as a whole, you can see that the second to the right section, histogram, you can see August 13th, that is the week we're looking for. So a significant drop off, and we're at the tail end of earnings season. We do from here onwards see a handful of big names each week. Bear in mind, we haven't seen NVIDIA report yet, but the bulk of the second quarter earnings season is out the way, hence the fact that we've seen over 80% of the S&P 500 having reported. First company we want to take a look at is Home Depot. Home Depot, of course, really in the spotlight at the moment, considering the decline we've got in terms of the jobs data, the fear that we could be entering a recession. What might that mean in terms of demand? And in particular, for the likes of Home Depot, where they're reliant on home improvements and the like, there's question marks around the potential front loading of purchases. People really ramped up demand during COVID. Is that demand still there? Are they able to push onwards and upwards? And how have they managed to address the rise in terms of inflation? Generally, they do well selling big ticket items. So you'd think inflationary pressures they can potentially pass on compared to some of those businesses that perhaps are really about those very small margins as they keep prices very low. But nonetheless, those big ticket items, a little bit more difficult to sell at times, where you're seeing people thinking they're in a recession and they've got question marks around their employment situation, as we have seen with the US jobs data. In terms of the annual outlook, we can see here there is an expectation that, a few years out, we see earnings per share well above where we are at the moment, 15.11 for 2023. Well, that's expected to be sort of 19.5 by 2027. But the next year and a bit, not necessarily expecting a massive ramp up in terms of earnings per share. In terms of revenues, 152.67 for 2023. Well, that's 154 for 2024. So again, not expecting a massive rise in terms of revenues this year, but we're expecting improvement following a drop off that we saw from 2022 into 2023. So steady improvement expected. In terms of the quarterly outlook, we're expecting to see 456. You compare that to last time around, that was at 465. So a decline expected in terms of year-on-year earnings per share. And then in terms of revenues, 42.57 expected. That is a decline from the 42.92 billion from last time around. So expecting to see declines from last year across both earnings per share and revenue. So again, that kind of continues the theme that we saw from 2022 coming into 2023, where we're seeing the business struggle to maintain the trajectory that or the momentum that we had been seeing over prior years. Now, in terms of the share price, we can see here that things haven't necessarily been super clear cut. I mean, you can see that we did see that ramp up over the course of COVID. You can see that initial decline really then saw a massive rally and a push all the way up to the 420 mark. Well, we pulled back significantly and we've been sort of consolidating since then. We did rally up through resistance over the back end of 2023 coming into 2024. And since then, we've seen this sort of retracement into trendline support and trying to build momentum since then. So will we push beyond expectations and actually see growth on a year-on-year basis for the likes of earnings per share, the likes of revenues, and that provides the potential push onwards and upwards to maintain the upward trajectory that we've been seeing over the past month and a bit. That's the key thing to be looking out for. I've circled some of the recent earnings reports just to show you exactly how it has been performing. You can see here that, you know, we're not necessarily seeing huge moves. Back here in November 2023, we did see a nice gap higher following a sell-off that we saw preceding that. But many of these reports, we don't necessarily see a huge amount of movement. And a lot of the time we close any gap that originally does come into fruition. Like I said, the recent rally has seen us potentially bottom out at this descending trend line. The creation of higher highs, higher lows coming into play once again here, because you can see this is probably a 76.4 fib down here. Yep, absolutely. Perfectly so. And then we're looking at the next one. Where have we come into so far? Well, we've come into the 61.8 fib. Of course, we've still got some sort of volatility to shake out within the markets over the near term leading into these earnings anyway. But hopefully this sort of bottom that we have seen at this descending trend line does provide us with the basis for the bulls to come back into play for us to push onwards and upwards and maintain the upward trajectory that had really been built at the back end of last year. We've seen that pullback following the earnings that we saw 3 months ago. And we essentially are really looking here for a continuation of this bullish trend. For the bears to grab a hold of this, you'd need to see a break back below this 331 support level here for Home Depot. In terms of the likes of the breakdown for how Wall Street views this, well, by and large, there's a lot of holds. I would say, you know, generally Wall Street estimates are positive. So generally people are trading on the long side, especially when it comes to US equities. So we have got 8 strong buys, 17 buys, a lot of holds though, 12 holds in play. If you look at the most recent projections or price targets from Wall Street, you can see here 21%, 6%, 14%, 14%, 7%. Yep, that is 7. So, you know, we've got some upside targets over recent projections, and that does sort of play into that rhetoric that I was saying about the base that we appear to have formed and the uptrend that we have been building from there onwards. In terms of the next stock to watch, it's the biggest US retailer, and that is Walmart. We can see that the company is really one of the outperformers when it comes to retail, and there's good reason for it. They certainly do very well at appealing to people that want decent products for a low price. And that was a key element of the sort of squeeze that we saw with the rise in inflation, really putting a squeeze on people's pockets. And they still wanted to have the same amount of goods, but they wanted to pay less for it to deal with the fact that the prices had gone up so much. And so many have moved to Walmart. Customers that perhaps weren't shopping at Walmart prior to the cost of living crisis appear to have remained there. Now, the expectation in terms of the annual outlook for earnings per share does point towards some steady growth, 319 in 2027. That's at 222 in 2023. So, you know, some nice growth going forward. Well, is that happening this year? Well, 244 up from 222. So steady progress expected to be made. But, you know, that makes sense because ultimately what you're looking at here is an economy that is continuing to deal with elevated interest rates. And once we see them driven down, then we're expecting to see growth really ramp up. And so with the fact that we're seeing everyone calling for a potential recession over in the US, question mark here is, do we see companies like Walmart feeling the pinch? Now, bear in mind, we saw the likes of McDonald's, we saw the likes of Starbucks, both suffering with their latest earnings. These are companies that generally are pretty much waterproof, right? They do well irrespective of the economic environment. And same kind of question here for Walmart. Are we going to see strength for Walmart going forward? And you can see in terms of the quarterly expectations for earnings per share, 65 cents. In terms of the comparison to last year, that was 61. So steady growth expected on that from 168.56 expected in terms of revenues. That's up from 161.5 from last year. So expecting to see some steady growth. The expectation for the coming years will be that we'll ramp up that growth. But again, the key thing is, do we manage to outperform? If you look at the previous 6 reports that we've got here, so 6, 1, 2, 3, 4, 5, 6, 7. 7 reports we've got here, outperformance across both earnings and revenue. So they do well in terms of guiding market expectations and beating them. So will we see the same this time around? In terms of market expectations, notice the difference here between Home Depot and Walmart. 26 buys, 11 strong buys, just 3 holds. So Wall Street certainly very bullish for this stock in terms of sort of price projections. We're talking about double digits for most, 11%, 21, 18%, 19%, 9% above where we are at the moment. So Wall Street remains bullish, but like I said, this comes at a very opportune moment because everyone's wondering quite what's happening in terms of the US consumer, what's happening in terms of the jobs market, and of course, Walmart, one of the biggest employers out there. So we're talking about an absolutely key barometer, key bellwether for the US retail sector. And this is going to be one of the biggest stocks to watch over the course of the week. In terms of the share price, this has been a long-standing outperformer. In terms of the weekly time frame, this is how it looks, right? Great company to be investing in. And we saw that trajectory really ramp up over the course of 2024. But recently, of course, the jitters we're seeing within markets really feeding into this stock. We can see in terms of previous earnings, we generally do see some pretty big moves around earnings. Look at this one down here, gap lower, but we ultimately closed it and moved towards the upside. Gap higher, but we didn't close it. Gap higher, but we didn't close it. So that's often the case. We see a gap lower. Ultimately, it seems to make it up and push onwards and upwards. But things don't necessarily play out that way towards the upside. That bullish momentum seems to just carry us through, and we don't necessarily close the gap on each occasion. In terms of the pullback, we've seen us move down through this ascending trend line here for Walmart. Crucially, haven't broken the 66.55 support level quite yet. And we're starting to move upwards here. If we see the 66.55 broken, points towards a wider pullback coming into play, potentially a sort of retracement here. And this would really be more evident if we see it here on the weekly time frame. So you can see this surge here, the pullback consolidation phase. We see that next surge. How deep is this retracement going to come? We don't necessarily know. I mean, ultimately, that last retracement was absolutely minimal. So you can't necessarily say, just because I've got these deep retracements drawn on my chart doesn't mean that that's where it's going to end. And you can see here that the 38.2 tallies up absolutely perfectly with that swing low that we had here at 66.55. So in terms of this stock, it has been such a long-term outperformer that we generally don't necessarily get massive retracement phases. They're often just consolidation. We've seen a pullback towards that 38.2 retracement. We're starting to see the bulls come back into play. We'd need to break that 66.55 mark to point towards a wider pullback for this stock. Until that happens, the bullish trend does still remain in play, and ultimately it still does for the long term. We're just looking in terms of the short term that we could see a wider pullback coming into play if we see that level break. Sorry, that should be on a wider view. So here it is in terms of a wider perspective. Here's that daily time frame. If we look at, say, the shorter time frame, we can see that very clear and considered, consistent trend towards the upside. Pulling back, now seeing lower highs, lower lows. If we want confirmation that these sort of bulls are back in charge, a breakthrough 70.24 would give us greater confirmation that that is the case. Now, finally, I wanted to bring up the breakdown for Applied Materials, a massive semiconductor manufacturer. Semis have had a bit of a tough time recently. And when it comes to companies that are heavily hit, when the market's being sold off in a way that it has recently, big tech has really come into the limelight, but also the question marks around when we might see a turnaround in terms of demand from the likes of Nvidia and the like really does lead to weakness across many of the semiconductors out there. Whether that's justified or not remains to be seen, and there's expectation that we will continue to see growth in the years ahead. Well, what's expected here? We've seen 805 for EPS last year, 840 expected this year, then up to 970s, 11s, and then 11s again. So we are expecting to see nice growth over the coming years. In terms of revenues, 27 up from 26 and a half, then up to 30, 32, sort of 33 actually, then 33.8. So again, nice growth expected in terms of annual revenues. In terms of the quarterly, we can see that things have been sort of drifting lower of late. 213 went into 209 in terms of the earning per share, and that's expected to decline once again. If we compare it to last year, though, it still does highlight improvement. 190 in terms of earning per share last year for the same quarter. And you can see that that trend in terms of sort of Q1 turned into Q2 into Q3 has really played out last time around, right? So we're seeing declines in terms of earnings per share, and we see that step up in terms of Q4, and then we start to see things sort of plateau and drift lower. So it's a cyclical trend as much as anything, and that would point towards a rebound in Q4, which is something that is expected. So a decline expected, but you can see in terms of that quarterly breakdown, we have seen earnings surprises towards the upside. So generally, they do manage to beat expectations. I guess the key thing would be, would that beat come to the extent of being higher than last time around of 209? Similar kind of things in terms of beating estimates on the revenue side of things. 668. Yep, 668. My eyes are failing me. 668 expected on the revenues, down from 665. So marginally ticking lower. We're not necessarily expecting to see huge gains in terms of the revenues for this company in the years, in the quarters ahead. In terms of the market outlook for this company, by and large bullish. You can see for Wall Street, you can see that upside target according to the mean price at 35%. So markets have got pretty bullish targets, but the reason why I attach a sort of selection of the most recent price targets is that a lot of the time people attach price targets, they don't necessarily update them, and subsequently down the line you might look at a price target that is a sort of mean of all of the price targets out there, but that might be unduly influenced by some sort of stale or old targets that have been provided. So by adding the most recent targets, it does give you a good idea of how the current analyst views are shaping up. And you can see here in terms of targets, 32% higher, 37, 64, 37, 31. So some pretty lofty targets from here. And that could be to a large extent influenced by the fact that markets have had a bit of a tough time of the late, and certainly semiconductors have. And I can show you exactly that. This is the chart for AMAT, or Applied Materials. The weekly time frame has pulled us back into this ascending trend line. So this looks really interesting. The long-term trend is a bullish one. We've pulled back into this deep retracement through the 61.8 Fibonacci support level and starting to find support on that ascending trend line. 1, 2, 3 touches. This is the third touch that has been set. In terms of previous announcements, we can see here, I've got them circled once again. Not necessarily super clear cut. It's not like we're seeing big outperformance and running away. You know, sometimes we see a small gap, then we sort of hold around for a few days and then start to move higher from there. So it's interesting to see exactly how these stocks perform around earnings season, because they're not all equal. Some of them might absolutely blast higher. Some of them just, you know, come in with a whimper, and then from then onwards they grind higher. Well, this is probably something like that. We're not so necessarily seeing huge moves within it, but the last earnings that we did see back here in February 2024. Oh, sorry, there's been one since. But this move here, you can see we were coming into it with some pretty significant volatility, and we continued that onwards. Again, we saw some move towards the upside back here in May, and then we sort of gradually ground upwards, even though we then spent about best part of a week and a half moving towards the downside. Well, this is coming into it in a very different moment, and if we do see the earnings justify valuations well above where we are at the moment, we could see this as a bottom with that ascending trend line, providing that third touch and a possibility of a rebound from here. In terms of the near-term intraday trend, we can see starting to regain ground, but really a breakthrough 212 would negate this trend that has been playing out of late with this sort of flatlining, then decline, sort of retrace, then decline, horizontal decline. Now we're starting to regain some ground. So there is still a chance that we see this roll over, and certainly it comes down to market sentiment, and there's a lot that goes into that. You know, US economic data, what the view is for the Federal Reserve, what's happening over in terms of the Japanese yen and the Nikkei and the like. So plenty going on at the moment. But this is a really interesting one, and certainly one to follow as we look out to see whether this pullback into the ascending trend line provides us with a potential buying opportunity for a long-term outperformer. Here's the monthly time frame. It's a great chart, and I'm sure many people along this journey will have said, oh, I would like to go long this stock, but they haven't seen a significant pullback. Well, that's exactly what you've seen here. Each time that we've seen, well, I say each time, we've seen this sort of 2-month pullback here, and it provided us with that previous touch on the ascending trend line. Well, we've seen this very deep and sharp pullback into the 61.8 and the ascending trend line. Are we going to see this stock bottom out from here? That's going to be the key one as we look in terms of tech stocks. But other than that, a big focus on the US consumer with the likes of Home Depot and Walmart also reporting over the course of the week.